Well, I'm sure it's safe to say that Powell over here is watching that CPI data very closely and probably paying close attention to what's taking place in the MOVE index, the highest seen since the great financial crisis. If you don't know what that is, don't worry. We'll talk about that on the Stock Market Brief Show, as well as some hidden levels there on the book map for tomorrow's trading session. If you like technical analysis and intermarket analysis, make sure to subscribe and like this channel. It is greatly appreciated. We're getting right into it today, starting with the S&P 500 on the 15-minute time frame. This chart is one that I shared on yesterday's video. We showed a couple of lines on the screen. It was the expected moves for the day. It's important to look at these now because now we have daily expirations on the S&P 500. So what was the expected move for the day on the SPY? It was 392.68 to the upside. We had that CPI data report came in at consensus, but remember, that's the 5th month coming down, right? But it's still relatively high looking back throughout history, above the Fed's 2% target. So yes, Powell will be paying attention to that very closely. Where did the day end? The day gapped up, and it came into a declining 5-day moving average right at about that that daily expected move, started sinking out through there. Where did it connect to? That week to date anchored VWAP held as support, and we blasted there towards the end of the trading session. So we have a lot of data still to come. Next week, we have the Fed interest rate decision, and we're already talking about the possibility of them potentially cutting rates and halting quantitative tightening. That came out recently from Nomura. Now, if you don't know who they are a gigantic asset management firm. Now, also to note, we have all the banking stuff taking place here as well. Moody's recently cut the outlook on the U.S. banking systems to negative, and obviously, we're seeing a lot of volatility in the markets there. Even the big short trader Danny Moses warns Silicon Valley Bank collapse will expose more trouble in these markets. Doom and gloom indeed, but it tells us one thing. It tells us to be very, very cautious, obviously, in these markets. So really quickly, what I want to tag on here is we have tomorrow coming out PPI data. So we're going to go over what the expected move is for PPI data, but I want to kind of show you this right here. Now, this right here is actually what CPI looked like on the last report. And I found this to be interesting because we kind of had this rip up, sink off, and then we closed towards the high. That was on the last report on the 15-minute time frame. Today, we did the same thing. We ripped up, we sunk down, we closed by the high. And the reason why I'm showing you this now is because tomorrow we have PPI data, and I don't know if people will remember, a month ago, but we are going to be getting that data. And last month, it came in hotter than expected. Remember, 0.4 consensus came in at 0.7 is the actual. And you can see the day started gapping down. It ripped up and closed towards the low of the day. So just remember, this market or this report can bring in obviously a lot of market volatility as well. I did so last month much more than the prior CPI report. It was PPI that really got the market moving, is what I'm trying to point out there. If we take a look back at that SPY on the 15-minute time frame, we are looking at an expected move up here towards 396.15 to down below at 387.31. You can see we closed tagging that declining 5-day moving average. We're still below a declining month-to-date anchored VWAP, and obviously, like I stated, the week to date held there too as well. So we're seeing a lot of chop. Now I'm going to remove some stuff and add some stuff on the screen, kaboom, like this. Basically, what I want to point out here are a couple of things. We could very well be bear flagging as it stands on the 15-minute time frame. You can see this move down. Now we're starting to see a move up within an up channel. So even if it comes up to here, that could just be tagging the upper daily expected move as well as the upper portion of this channel, and that would be right at around the weekly expected move too as well. It would be getting back above that month-to-date anchored VWAP, and I applied a couple other ones. This right here, so this week to date, sorry, I'll point you back into this direction. This week to date anchored VWAP is actually also the low of March. Now, the low of March, you can see it's holding. And take a look at the high of March. You can see it's also holding as a level of resistance. Remember, today came in and tagged the 5-day moving average, okay, right over here. Now, that's also in line with what? Well, the March high anchored VWAP. So if I go back to this screen, you can see we tagged it there. That was the purple line is the 5-day moving average. And also it tagged it right here. That was the anchored VWAP from the high. So as it stands right now, price, right? It expanded and now it's contracting. You can see Lower highs, higher lows, price is coiling up. So it could be gearing up for a potential move. Is that mean? So what we got to watch for is a potential breakdown to 387.31 through that level opens the door to the lower weekly expected move. Or if we start going up higher, you got to watch for this upper weekly expected move and upper area of confluence up here. To be more confident in this market, you want price to get back above this 5-day moving average, and you want to start to see it flatten out to go neutral and then start turning back up. You want price, yes, if it comes up here, right? Boom, wait for price to settle down, maybe consolidate. Maybe this will come back up like so and offer up another opportunity to potentially go long if we really are trying to find some sort of a bottom here. But remember, the market is extremely volatile, so you need to be focused on risk most importantly. Now, going into the book map hidden levels here, this was yesterday's screenshot. We showed out those upper expected moves, the lower expected moves, and some levels to pay attention to. The upper EM for the daily was at 39.75. Guess where we came into earlier to trading session today on that big rip up, right at about 39.75 to 39.70, and then we started rejecting from those levels. So these are important levels to watch. So I'm going to update them. $42 expected move going into tomorrow's trading session, which would take us to right at around 39.95 and to a low of roughly 39.05. Now, what I found interesting is once the market closed today, right here, the market closed, a couple other levels lit up. One right here at 4,000 and another one right here just at about 3,900. So going into tomorrow's trading session, pay attention to these levels because they could act as potential support, potential resistance as the trading session progresses. Now back to this. This is the move index. What is the move index and why is it important to note that we're seeing a level reading that we have not seen since the great financial crisis? The move can provide an early alert regarding a changing risk sentiment in the bond market, but also in the general financial market ahead of the equity markets. Remember, the bond market is the smart money, okay? And then the equity markets are considered the dumb money. So as we're seeing right now, bond volatility is firing off like a rocket ship. So we must be very, very cautious. You're seeing it also in the 10-year yield, right, as it's been falling rapidly and then ripped right back up. Very interesting stuff. And then you can see here, I just overlaid the S&P 500. We had a big spike there in that great financial crisis right at about here. And then we started seeing the market come down. Remember, the bond volatility was rising and it gave us heads up notice that there could be some implications to come. We also saw that here during the pandemic. We saw a big spike in the move index. And right now we're not only exceeding that, we're exceeding almost, we're not too far off of the highs over here of the great financial crisis in that volatility index. That's all I got for you on today's episode, everybody. We went through a lot, but in a short period of time. Hope it helps out in tomorrow's trading session. Be careful and be safe. It is crazy out there.